The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
The breaking news is Wednesday. The Fed have announced a rate cut of 0.5%, which is significant. It's been 2 years since the rate cut has gone in a reverse direction. With the upcoming election, that perhaps will have a significant effect with regards to debate on inflation. So once again, the Fed have announced a rate cut of 0.5%.
Announcement, actually, it's just coming in right now. The Federal Reserve has announced that it's a 0.5 point, so they've cut interest rates by
That was not the most expected. Most of what I read was a 0.25 point was expected.
And it was a toss-up. And really, here's the thing, right? The Federal Reserve had raised interest rates to try to get inflation down, and yes, they did that job. But the more recent readings that we have gotten on the economy in just the last 6 weeks since the last time they announced their decision has been pointing to a weakness in the labor market. So if the Federal Reserve doesn't want its high interest rates, which are still, by all standards, are still high, to cut into unemployment and make more people get out of jobs or increase unemployment further, well, that's the reason why they wanted to more dramatically cut interest rates. They decided to do so by 0.5 percentage point. They said, quote, recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have slowed and the unemployment rate has moved up but remains low. So again, we'll have to see what the Fed Chairman Jerome Powell says in his press conference to further explain the move today to cut interest rates by, again, 0.5 point.